All right, traders, I just had one of my biggest green days throughout the past 2 months. I ended up making nearly $15,000 on the day. With that being said, I'm going to be recapping the trades and the price action analysis. Today was absolutely phenomenal. I ended up making $7,000 with Tesla call options, and then I made nearly $8,000 on SPY options. It was such a phenomenal trading day. I'm going to be breaking it down and recapping the trades and giving you the upcoming trading plan heading into tomorrow. Fridays are known for being my best trading days, and I'm going to break it down to you in terms of the upcoming trading plan. So if you've been watching our videos, I've been discussing how the SPY is likely going to drop when it hits 457. The reason why I said 457 is because that was the next level on the daily chart with major resistance. If you go back throughout the daily chart, you can just visually see, if we look at the next overall resistance level, once it goes above like 454, 455, you can just see there is a ton of major resistance right here at 457 to 458. Now, what are some things we need to understand? We need to understand, since we've been in an overall bullish market since March, where would be the best prices to dip buy calls if we were to just go based off of price and not really discussing the patterns and the strategies that I've been teaching you to buy calls that don't necessarily correlate with these best prices that I disclose in these videos that really haven't been hitting for calls, because whenever it has a drop, it just quickly recovers and it doesn't have that oversold bounce. So these would be your levels to keep an eye on. This 447 to 448, you can just visually see, look at all the support. You have so much support in the 447s, 448s, ton of support. So based off the daily chart, that would be our level for calls if we're speaking in terms of daily. Now let's break this down. So in terms of SPY, it is having a small move up during extended hours trading right now. In terms of how this looks to me, if we take a look at the chart, overall, this doesn't look bullish. This is a bearish top wick. We discussed this yesterday, not the most bullish candle. This is like a trend reversal candle, plus it was at one of the best resistance, 457. This right here is a bearish candle, so likely it's going to try to drop. But what we need to understand is this has been a very dangerous market to try to short and buy put options in the dips. That's one of the worst ways you can try to make money within a bull market, is by not only going against the trend, but going against the trend at the worst prices possible, which means you're shorting support, you're buying put options into support. Now, obviously, there's going to be those temporary moves where it does work and SPY could fall harder, but we really don't want to bank in that sense, right? So we just need to understand the market had a nice little drop, but it is still technically considered dangerous to buy puts at lower levels. The time to buy puts was in the 457 to 455 range, like we were discussing. Literally disclosed within my chat and within the videos, I literally said 457 is the best price for puts. Now, this is what I need you to understand. So this is going to be key previous resistance, 452. This was the level that I told people to buy calls. 452, this was one of our key levels. This was a major resistance level, and when SPY breaks above a major resistance, when it drops back down for the first time, that's where it's going to try to bounce, which is why I ended up alerting calls twice when it was in the 452 range. I did it at 3:40. I did it at 3:47 p.m. I also did it before then, early into 3 p.m. and 2:30 p.m. as well. We killed it on that dip buy at 452, and we killed it before then too. We were hitting calls all on this bullish move right here. We were all hitting calls with this bullish confirmation. If you watched my video, I said 454 and 452 are going to be our key levels to buy calls, that 453.70 to 454 and that 452. Both times, even though the overall trend was bearish today, both times there was very nice reversals at my key levels for calls, which was also disclosed within the watch list section of Trader Society. You can visually see the key levels for SPY is going to be 453.7. That's the support where we're interested in buying. It's likely going to bounce first. It did go lower, but it bounced higher for the recovery, meaning, which is what I did, I bought calls at that price. And at first I was down, so I held and I added and I averaged down, and that made me more money, right? Sticking to the plan and sticking to the levels. And then I sold into the rip at 454. And then 452 is strong support. This is very ideal to buy calls. We hit that one twice. It was such a great day for calls using the patterns and strategies, even though the overall trend was bearish. Now, what you need to understand is, in terms of what's happening, the daily chart's flipping a little bit micro bearish. This has been basically a 2-day drop for the most part. I mean, it barely dropped yesterday, but it's 2-day drop for the most part. Now, 452 is reacting as support, which is bullish. This was the previous resistance level where the bears got trapped and SPY had a nice move up for 2 days and then it started selling off. It dropped back down to previous resistance. That's why I said 452 is a buy. It's likely going to bounce and turn into a floor. That's how we came up with the key level. Previous resistance is likely going to react as a support for the first time for the initial reaction. So right now it's bouncing off that level and it is up during extended hours. Now, in terms of how the daily chart looks, it's not the most bullish. But you have to be extremely careful with puts because SPY already had such a big move. It dropped from 456 to 451.60. That's quite the big drop in terms of being in a bullish overall market, and you don't want to get trapped in puts. So right now the bulls are trying to tell the market that, previous resistance is reacting as support. We're trying to maintain strength and we're trying to maintain bullish. That's what's trying to happen right now. Now for the bears to step in and really take full control heading into tomorrow, this is what would need to happen. This is the make or break level. Basically, in my eyes, this would be the level 452.80. 452.80 to 452. That's the zone. So what I want you to understand about that zone is the support is at 452, and for the bears to be in control, the resistance needs to be at 452.88. So if 452.88 reacts as a resistance, then they're going to try to sell off and go for new lows under 451.50. Now, if 452 to 452, if 452 is holding, it's forming a floor. If they can break above 452.80, turn it into support, then it will go up and it's going to try to go to 454.70 to 455. So in terms of speaking on this video, I would want to buy puts at overbought levels instead of trying to, confirm that this 452 support is reacting as a resistance level. I wouldn't want to do that, even if it's the right thing to do. I would rather just sit on the sidelines because I don't like buying puts at support levels when we're in a bullish market. So it's one of those opportunities. If we get it, we get it. If we don't, we don't. But we wait to trade the best setups, best prices, right? Now, 454.70, the high of this wick, major resistance, and then we have a gap to fill above at 455.20. Those are the levels where I would want to short and buy the SPY. Now, in order for it to get there, it needs to break above 452.80 and turn to support. If it does that, then it's going to be on its way to going back up to fill the gap at 455, which would be a great opportunity to short. And like I said, if 452.80 reacts as a resistance, they're going to try to crack 452. If 452 cracks, then it's going to start to go bearish for the short term. Now, if we go bearish, what are the levels for calls? So based off the daily chart, the level was 448. 448 are very nice levels. So based off of oversold levels that have not been tested yet, these are my levels. I will say that 458 to 458.80, the bottom of these wicks right here, so like 448.80, these are our best levels for overall calls, speaking in terms of oversold. Now, another level where we can bounce that's very, very sweet is 450. So notice how, in terms of how I'm coming up with these key levels, I'm looking at the bottom wicks of these 30-minute candles, and these have not been tested. So you can see right here, 450 was strong support, bottom wick. It has a nice breakout, and then it retests, and then it skyrockets. Bears got trapped. So the point is, this new 450 level has not been tested again yet. So it's likely going to try to bounce at 450, even if the trend goes bearish. And if that doesn't work out, or if I take my win there, make my money, quick scalp, then my next level I will target is 448. So based off of this video, if we were to go with best setups at best prices, this is what I would tell you. 448.70 and 450 will be the two levels that we target call options heading into tomorrow. If we were to go with the best levels for puts, 454.70 and 455. Now, in terms of what you need to understand, this is the middle. We don't like trading the middle. Fuck the middle. But in terms of what you need to know about the middle, if 452 cracks and reacts as a resistance, we're going to sell off and go to the lower levels. When we hit the lower levels, we should see a nice bounce for scalpers. If it breaks above 452.80, turns into support, it's going to go to 454.70 to 455. So if you're going to trade the middle or watch the middle, you're simply looking to see if support is forming at 452 for a quick scalp on calls, and if resistance is forming at 453.80 for a quick scalp on puts. Notice how I said calls at 452 and then puts at 453.80. Why did I say that? Because we go with resistance and support. We don't like buying calls towards the upper middle, and we don't like buying puts towards the lower middle, but we don't like trading the fucking middle, period, right? So that's what I need you to understand. If we break down the price ladder, 455.20 to 454.70, best levels for puts now. Gap close reversal, key top wick resistance, that's where we want to do puts. Below that, the next level is going to be 452.80, and then below that 452, and then we have 450, a lot of key support. It's going to try to bounce 450, and then we have 448.60, right? Now if we were to go a little bit lower, 447.50 and 446, all levels I would love to buy calls. So speaking in terms of oversold levels where I will look to scalp calls very, very quickly in and out like a sniper, 450, 448.70, 447.50, and 446 gap close reversal. Those are all my levels for calls. Absolutely love it. Right now we are in the middle. You don't have to trade it. You can sit out, wait for the best setups, the best prices, or if you see a confirmation at one of the key levels in the middle and you understand what's going on, then you could try to trade it, right? And then in terms of puts, 454.70 to 455.20, gap close reversal. Very, very simple. Use the 30-minute charts as confirmations. Trade the best setups to the best prices. Tomorrow is going to be a phenomenal green day. We are prepared to trade the best setups at the best prices. And understand, in terms of the way I trade, I don't trade blindly based off of these levels. If I'm bullish at a level, I might not buy calls at that level. I might do puts, even though it's a terrible entry to do puts. I might do it. Well, technically, I wouldn't do that in this overall market, likely because we're in a bullish market. I don't want puts at terrible fucking levels, right? I want the best resistance levels. But in terms of calls, there might be a level where I'm interested in puts, and I might want to do calls at that level if it's reacting bullish. So it's just understanding, like, I trade what I see, but I do have a bias in terms of like, this level is terrible for puts or this level is terrible for calls. And typically I won't do that. I won't trade against those levels, but I won't trade with those levels. If there's no confirmation for me to get in on the trade, I'll just look to sit on the sidelines. But I want you to understand, I trade what I see. I don't blindly trade levels or a video. I have my plan, I have my levels, but then as the market's opening, I get new levels, I get new patterns, I get new trends, I get new confirmations. You have to be in Trader Society to see it, to see how we move. I'm telling you, you guys aren't seeing it. Like, you're not seeing the live. If you're in Trader Society, you're seeing it, man. We crushed it today on several trades, and they were all from calls. On a bearish day, I made all my profit today on call options, and I'm going to continue to focusing on that because it's been working. The beauty of call options was the overall trend of the stock market has been a bull market. So even though SPY kept going lower today, every single key level that I gave out eventually recovered. I was buying calls at 453.80. As this was dropping, I was buying calls at 453.80. When it went to 453, I added very, very heavy. That put me at a good average, meaning if SPY goes to like 453.40 in the middle, then I'm going to start making money, right? I average my costs down. You can't do that if you're fighting against the overall market. The overall market was bullish. So likely, if it hits one of my key levels, it might drop a little bit, 50 cents, 70 cents, but it's probably going to spike back for a short-term spike where I can profit, even though on the day, if it goes overall bearish. And just to understand, most days in a bullish market, it's not going overall bearish and consistently dropping. But what do you expect to happen when it hits 457 at 52-week highs for the first time, right? Just a matter of time to see some sort of pullback. But it's just understanding the beauty of call options at oversold dips in this market is, it's like you don't even need to be perfect or have the best entry. If you average your cost down a little bit and wait for a better level to do that, it's like it typically tends to recover and then just scale out and sell into the rip and wait for the next best level. That's why when I was done profiting in the 453 mid zone and selling at 454 for profit, I waited for the next best level, which was 452. And I hit that multiple times. I hit 452 when it was under and when it was slightly above. I banked both times. Now, Will, in terms of was there some bullish patterns to be buying the SPY today, what were the plays for calls? Well, you could see right here, in terms of some patterns that I did end up identifying, because people were wondering in the chat in terms of some of the reasons why I was buying calls, this was one of them. I want you to take a look at this pattern. Look at the green candle. So look at the green candle. Now, I want you to understand, everything I'm doing is like visual for the most part. So I'm visually looking at patterns, and I'm looking at the 10-day, 30-minute chart to identify these patterns. So this is the pattern that I want you to understand, and this is why I was so bullish on the SPY. So this right here, you have like this green bullish wick. You have this green bullish wick. What have I been telling you for over 2 months now in these videos? I've been telling you it loves to spike back up to the high of these wicks, right? So you have this green bullish wick, you have this green bullish wick. Then you have this big red candle, right? Big red candle in the middle. And then you have this big red candle in the middle. And notice how these candlesticks look nearly identical to the candlesticks side by side. There's a lot of similarities. Notice how the high of this red candle didn't retest the high of this wick. Notice how the high of this red candle didn't retest the high of this wick. It almost did. It almost did. It put in lower highs, right? And another similarity was, notice how once this 30-minute candlestick closed red, it had a small drop and then an extremely bullish recovery to break out. Notice how once this 30-minute candlestick closed red, it had a small drop and then a bullish recovery to start to break out. You see that? That's why I was so bullish when this 30-minute candlestick closed red. I was so bullish, and what the pattern was telling me was, it was telling me that it's going to drop first and then it's going to have a bullish recovery. Now, sometimes it's not going to drop first. So in that situation, I might take a starter position, and that's what I was doing. I was taking a starter position because I have a large account. It really doesn't matter in my situation if I get in early, because I could just average out and have nice size, because I understand in terms of the pattern in the trade I'm seeing that there's a high probability this can drop first. But if it doesn't, I don't want to miss out. So there's two ways to go about that. You can average your cost down and take a starter position when it has that next big lay down, that next big drop, or you can just say, fuck it. I'm just going to aim for the best price possible. If it drops, then I'll get in. If it doesn't drop and it just keeps on going up, then I missed out. But at least the pattern worked and I was on the right path, right? So that's something you have to figure out if you want to do as a trader. I know what I'm going to do. Now, if you were going to do the situation where, you know what, I'm comfortable with taking a starter position, even though you have a smaller account, if you were comfortable with doing, which I don't think that's the best thing for you to do, basically, you're going to want to have 2 to 3 contracts. And what you're going to do is you're going to only take one contract at that starter position size. And then when it has that nice drop, that nice leg down, you're going to add 1 to 2 more contracts. That's what you're going to do. So small accounts can average down. That's a big myth where people say, oh, you're adding, I can't make money as you're adding. You're completely full of shit. If you can't do 2 to 3 contracts, you should not be trading. You take one contract at the starter price, if you even want to do that, and then you just add 1 to 2 more contracts at the next add, and you wait for a bigger drop so you get a decent average cost. You don't add into a small drop, only into a bigger drop. So what I would consider a bigger drop is like 50 cents, 50 to 70 cents, right? So that's what you need to understand. You need to actually think and sit, what would be best for my situation? And if you're going to sit here and complain and say, oh, I can't make any money because you're adding, well, then what I would tell you is, then wait till I add. Wait till I add. Wait until I actually add to my position and then get in on that entry. That's what I would tell you in that situation. So every trade's different. This is why you have to actually know the patterns and understand the trade, because there would be trades where the pattern's going to say it's not going to drop first. So then I'm just going to get in, and then you might miss out on the trade, right? It's understanding. You have to actually learn the trading strategy. There will be times where it says it's going to drop first, but it's going to have a big bullish move overall. So I might take a starter position. Or maybe I won't take a starter position. I'll just wait for the better entry in that situation because maybe I'm not as confident, or maybe I just don't want to do it and I just want to wait. Every trade is different. It's not created equally, but the patterns are going to tell you what the most likely outcomes are, right? And you need to understand what is it you're going to do as a trader. So you could see the pattern worked. Green, red, drops first, and then you know it's going to try to flip bullish, so you buy into the drop. When everyone's bearish and it's dropping, below this 30-minute, you buy into the drop. And then it flips bullish. People get confused. They don't understand. They're like, Will, that 30 minutes red. Why are you buying calls? It's dropping. It looks bearish. If you saw the pattern, it's supposed to flip bullish. That's my response to that. I'm identifying patterns like it's green, red, green. And it says it's supposed to look bearish and drop first, which is what it did. Then it flips bullish, meaning I'm going to want to be buying calls and be the most confident if it drops first. Because if this drops first, that's giving me more confirmation that the same thing has been repeating itself for over an hour. So in my theory, this is how I look at it. If this pattern says it's going to drop first and then have the bullish recovery, and I decide to take a starter position because that's what I want to do, I would be more confident if it dropped first than if I was right about the starter position and it went up first. And the reason why is that means history is repeating itself to an exact T, and I'm getting a better deal. That's why in certain situations, you'll see me so fucking confident when it's dropping, because that's literally confirming that the exact same pattern is repeating. If it were to spike first, maybe it's a situation where it's just a small spike and then it fakes out and the same thing doesn't repeat. But if I see that a pattern is consistently repeating itself that I am trading, I will be more confident in the pattern, even if I'm losing money at first and going against me because I took the starter position. And starter position is a choice. You don't have to do that, right? So those are the things that I would tell people. And if you have a smaller account, then avoid the starter position. Just wait for me to add. But you have to understand the trade and understand the education, because there's certain trades where it's not meant to be added. I'll just get stopped out because the pattern says that this shouldn't go below this price. And if it goes below the price, then that means the pattern's not working, and I'll just stop out instead of adding into a loser. That's why you have to actually understand the trades, because each one is set up differently. But you can see when it dropped first, it had a very bullish overall uptrend, right? And then this is the more key. This is why we continue to buy calls. Look at this. So it flips bullish, it closes 30-minute hammer. Now look at this. It breaks out and forms a green wick. You see that? And then it breaks out and it forms a green wick. You see how it's doing the same thing? What happens after it forms this wick? What do I tell you all the time? It spikes back to the high of that wick. Do you see that? It spikes back to the high of this wick. So when you see this 30-minute candle close green like this, and you see that the same pattern has been repeating itself, right? We're literally talking about the same exact pattern. When you see the 30-minute candle closes green above, 30-minute candle closes green above, look at what it does. It bottoms at the lows of that previous 30-minute, and then it skyrockets and break out. It bottoms towards the lows, so it bottomed a little bit higher. That's the difference. History is going to repeat itself in similar cycles, not to the exact T, but the patterns will give you a better understanding on where you should be entering the options. And you could see it breaks out, and it retested the high of this wick. 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 Do you see that, man? Everything I'm teaching and what I've been speaking into existence, it's consistently working. And that worked phenomenally even on a bearish day. This is the beauty of it, man. That's how I'm able to make all my money on calls. It doesn't matter if I'm fighting against the overall trend. We're in a bullish market. I will continue to buy calls on oversold dips at my key levels because they tend to recover. The worst thing you can do is buy puts into a big drop, especially when the 30-minute candle flips green and bullish. If you want to buy your puts so bad, why don't you wait until the high of day retest or until the gap fills where there's a lot of resistance? This is where the bulls got trapped and destroyed right here at market open, right? Why don't you wait for the 30-minute candle to flip red and bearish? I talk about all the time. This is a bearish doji, and then it starts to drop. What's so surprising? That's the beauty of this game, man. It is highly predictable. And then in terms of my other trades on calls, it was simply using the level. I told you guys 452 right here. This was going to be our key level for calls. It wasn't tested. 451.30, previous resistance 452. These two levels were our key levels to be buying calls that we discussed in the watch list in yesterday's video, because that previous resistance that hasn't been tested is going to try to react to support. You got a nice strong bullish 30-minute bottom wick that has not been tested right here. This is the zone where it's going to start to bounce. That's why I was hitting calls twice in the 452s and slightly under 452, selling for a very, very nice profit. This day was so spot on. It was incredible. It was an incredible trading day. That's my overall recap on the trades. In terms of Tesla, I did not get burnt on Tesla call options. I stuck to my levels. I stuck to my plan. So in terms of my watch list said these were the levels that I was looking at for Tesla calls. 481.50 is our key gap. 475.90 is key support, and 470 is the lower gap. In terms of how I traded Tesla, I did very, very well on Tesla. I made over $7,000 on Tesla calls, even though the overall trend was bearish. You have to remember, I'm a scalper. I get in and out within minutes. I alerted Tesla calls literally at the lows at market open. I typically don't do well at market open, but when I saw this was at strong bullish support, one of my levels, very, very key support, and I saw this was a green bullish wick right here on the 1 minute, I bought calls. As soon as I got in, Tesla spiked over 4 points. I sold the rip, made $5,000 within the first 3 minutes of the market open. And that's how I do it, man. And then I did it again. Towards the bottom of here at 276.50. I did it again. And then I did it one more time. I kept on hitting this bottom range support because I noticed, Tesla has a lot of support towards this 276.60 level. I'm going to keep on trying to hit it, right? But then it kept on forming lower highs, which is bearish, and then it's going to try to sell off. And I stayed away from it because I know when to stay away from it. And also the 30-minute candles told me to stay away from it. That trade had nothing to do with the 30-minute chart. That was all based off of 1 minute candles and all based off of my levels that I used in the pre-market. So it's not just 30-minute candles, it's also the key levels in the 1-minute chart. I love trading the 1-minute chart. 5-minute chart's a good time frame too. But it's just understanding there was a ton of support in the pre-market at 276. That dip buying opportunity worked multiple times. This is very strong support where Tesla had a very nice breakout. So it's going to be a good dip buying opportunity with a tight stop. You could see once it cracks support and then reacts as resistance, it's going to fall off a cliff, as it fucking should, right? Because if you hold your hopes and your key level cracks and reacts bearish, then you deserve the big fucking loss. And if you're going to hold through that, you better know your levels of risk, because not all brackets are created equally. It might be a bracket where the next support level isn't until 266. What are you going to do? Hold through a 10 fucking point drop, right? That's why you need to know where every single key level actually is. It's a ladder. Not all ladders are created equally. Not all risk is created equally. I can get it, maybe if you want to hold for the next level and it's only a small little drop, then fine. But if it's a big fucking drop where there's no support, then no, don't hold it. So that's my overall thoughts. That's my overall opinion. This was another level where I hit Tesla calls using the 30-minute chart. The 30-minute chart right here, as I talk about all the time, when a stock hits a key support and it forms like this 30-minute top wick, it's going to try to break out and retest the wick, like SPY did multiple times today. So when this 30-minute candlestick closed bullish at my key level, which was 270 in the watch list, that was my lower key level, at the gap, I noticed this is bullish. It's going to try to re-spike back to the high of the wick. I told the team play calls, and then it spiked for 30 minutes straight. Such a great trade on calls. So that's my overall scalping strategy. I get in and I get out, and it works both ways. It worked in a very bearish day, and it works even better on a bullish day for bigger wins. But the point is, it works. So that's the beauty of it, man. I'm going to leave it off at that. With that being said, if you do want to join Trader Society, it's going to be the first link down below in the description. It is a one-time fee. It is lifetime access. We are getting ready to close Trader Society. If you want to join, the time to join is now. We're going to be closing it to the public temporarily. We're still going to be working with all members and upgrading the servers and making everything better within Trader Society. And we will be raising the price. But if you join now, you will be grandfathered in for a lifetime. Within some time, we're going to be raising the price drastically, and it will likely turn into an annual recurring, a lot more expensive program. So it's the best time to join. If you're interested in joining and you're watching this video, you are in luck. This is literally the best time to join possible. And then in terms of our other service, that's going to be launching very, very soon. That's going to be more affordable to where everyone can join if they'd like. So with that being said, I will keep you guys updated. We're going to absolutely crush it tomorrow. If you want to trade live with us every single day, it's going to be that first link down below in the description. It's a one-time fee and it's a lifetime instant access.